Earthling, your species once believed that houses could only go up in value. You built entire empires of paper money on top of this belief and called it the American dream. But when my sensors analyzed your economic data from the year 2008, they detected something far stranger. A collective hallucination so powerful that even your top scientists in suits, what you call bankers, thought it was real. You see, to most of your kind, the 2008 financial crisis was caused by greedy banks and reckless borrowers. That's the comfortable story, isn't it? Someone else's fault. But according to the data in my archives, greed was only the symptom, not the cause. Let me ask you something, Earthling. If your entire civilization depends on the idea that debt equals wealth, what happens when the illusion breaks? In this report, I'll dissect how the global economy collapsed, not because of a few bad actors, but because your species engineered a financial system that rewarded delusion. I'll show you how ordinary humans, from Wall Street titans to suburban dreamers, all participated in the same grand experiment until the numbers stopped obeying your logic. So, prepare yourself, because this isn't just a story about banks or mortgages. It's a story about how humans managed to sell each other the same house millions of times and somehow believed they were all getting richer. Earthling, let me take you back to the early 2000s. I had just landed on your planet, disguised, of course. My human name was Elliot Thompson, senior market analyst at a small mortgage firm somewhere in California. At least, that's what my ID badge said. The atmosphere was intoxicating. Every human around me was convinced that real estate was the safest path to infinite wealth. Prices never fall, they said. It's basic economics. You had television shows about flipping houses, dinner conversations about investment condos, and neighbors who bragged about their new investment properties. It was, from a scientific standpoint, a full-scale mania. The government had just lowered interest rates after a mild recession, and cheap credit was flooding the economy. Banks, those temples of human confidence, started lending money to anyone with a pulse. My supervisor at the time, a man with a tie brighter than his IQ, once told me,
"Elliot, if they can sign their name, they can buy a house."
I remember scanning through loan applications. No income verification, no job verification. Some even called them ninja loans. No income, no job, no assets. Humans had turned risk into a joke, and everyone was laughing. But here's where it gets fascinating. The system rewarded it. Every time a loan was approved, the lender earned a commission. Then, the loan was bundled into something called a mortgage-backed security, or MBS. These bundles were then sold to investors all over the world. It was financial alchemy, turning unstable debt into gold. And the more loans you created, the richer you looked on paper. I still recall walking through a bustling Wall Street office in 2006. Champagne on desks, applause echoing as sales hit record highs. One trader looked at me, well, at Elliot, and said,
"We're printing money, man. Housing can't go down."
I smiled. My translator chip recorded the statement as a level 10 delusional confidence spike. But there were warning signs, faint ones, like static in the data. Some humans were buying 3, 4, even 5 homes without ever planning to live in them. Entire neighborhoods in Nevada and Florida stood empty, yet their prices kept climbing. I remember pausing outside one of those ghost developments at sunset, the air still thick with optimism. My senses detected what I can only describe as economic euphoria. It was the same pattern I had documented before, during my analysis of the Great Depression nearly a century earlier, right before the collapse. And still, no one seemed concerned. In their minds, the housing market had evolved beyond gravity itself. You truly are remarkable, Earthling. Even when every law of probability screamed danger, you chose to hear only profit. I almost admired it. Almost. Earthling, this is where things start to get scientifically fascinating. By 2006, I had been fully embedded within your financial ecosystem. My human disguise had even earned a promotion, Senior Structured Finance Consultant. It sounded impressive. I still had no idea what it meant. Every day, I watched as humans invented new ways to make imaginary wealth look real. The tool of choice? Something called a collateralized debt obligation, or CDO. Now let me translate that into alien logic. A CDO is when you take hundreds of risky home loans, mix them together, and somehow convince investors that the result is safe. It's like blending spoiled milk, moldy cheese, and expired yogurt, and then labeling the smoothie organic. The theory was that by combining bad loans from different places, the overall risk disappeared. Statistical magic, or as my species would call it, wishful arithmetic. When I questioned one of the human quants, those mathematical wizards behind the screens, he said,
"Elliot, the models show housing prices have never fallen nationwide."
I asked, and if they do? He blinked.
They won't.
That was the entire safety protocol. Faith. But wait, it gets stranger. These CDOs were then insured using something called a credit default swap, CDS. Essentially, investors were betting on whether these loans would fail, and others were betting against them. It was like selling fire insurance on a house you didn't own, and then hoping it burned down. Humans created a multi-trillion-dollar market built on the assumption that nothing bad could happen. My calculations showed that if even 5% of the underlying loans defaulted, the entire system would destabilize. But nobody cared about that. They were too busy buying yachts. At one meeting, I sat across from an executive of a major investment bank. He had a smile worth $1 million and a portfolio worth several billion.
Elliot,
He told me, swirling his glass of scotch.
we've eliminated risk.
My sensors had to recalibrate from laughter. To demonstrate, he showed me a CDO squared. Yes, Earthling, they took the CDOs, already bundles of risky loans, and bundled those bundles into new securities. It was leverage on leverage, a pyramid of optimism balanced on a single mortgage payment in Arizona. And humans rated these products as AAA, the same grade as your government bonds. Why? Because the credit rating agencies, those supposed gatekeepers of truth, were being paid by the very banks they were rating. A perfect feedback loop of self-deception. You see the irony, Earthling? Your species created a financial black hole so dense with confidence that it bent reality itself. Still, for a while, it worked. Bonuses exploded, stock prices soared. Average humans were flipping houses like trading cards. And I, the alien pretending to be human, was quietly documenting the anatomy of a collapse that everyone else believed was impossible. Behind the glass towers and spreadsheets, I could already feel the pressure building. My instruments picked up the faint hum of instability. You could almost hear the cracks forming, like the first tremors before an earthquake. I had seen this before, on other worlds, civilizations that mistook speculation for progress. They always end the same way. That was when the first subprime loans began to default, quietly at first. A few missed payments here, a foreclosure there, nobody cared. Not yet. But the data told a different story. The foundations were beginning to crumble, and Earthling, that's when the illusion finally started to collapse. Earthling, every empire collapses the same way, slowly at first, then all at once. By mid-2007, the air in every trading floor I infiltrated had changed. The laughter had softened, the champagne had disappeared. My human colleagues were whispering now, phrases like liquidity problem, credit squeeze, and temporary volatility. Translation, they were terrified. The first tremor hit when small mortgage lenders started going extinct. I remember walking into the office one morning and seeing headlines flash across every screen. New century financial files for bankruptcy. One of the biggest subprime lenders gone overnight. Still, the humans told themselves it was contained. That word, contained, became the mantra of denial. Every economist on your news networks repeated it like a spell meant to keep reality away. But data doesn't care about belief. By late summer, the defaults had multiplied. Entire neighborhoods in Florida and Nevada turned into ghost towns, streets of for sale signs and half-finished houses baking under the sun. My sensors detected a sharp drop in human optimism index, replaced by rising levels of panic. Then, in 2008, the dam finally broke. It started with Bear Stearns, one of Wall Street's proudest institutions. Two of its hedge funds collapsed under the weight of toxic mortgage assets. Within weeks, the entire firm disintegrated, swallowed by JP Morgan in a government-backed rescue. The contagion spread. Banks stopped trusting each other. Credit froze. Humans had built an economy on the assumption that everyone would always pay, and now no one was paying anyone. I was on the trading floor the morning Lehman Brothers fell. The air was electric, thick with disbelief. Screens flashed red. People shouted into phones. Some just stared in silence. One trader muttered,
"Lehman's gone."
Another laughed, the hollow kind, and said,
"We're next."
Lehman Brothers, 158 years of history, erased in one weekend. That was the trigger. Stocks plunged. The global financial system went into cardiac arrest. Even alien technology couldn't model the chaos accurately. Across the planet, governments scrambled. The US Treasury rolled out emergency bailouts. The Federal Reserve slashed interest rates to near zero. Humans called it quantitative easing. From my perspective, it looked more like economic life support. Earthling, I must admit, watching your species fight for survival was both tragic and mesmerizing. You spent decades building a financial tower out of dreams and leverage. And when it collapsed, your first instinct was to rebuild the same tower, only taller. The human cost was staggering. Millions lost their homes. Families packed their lives into cardboard boxes. Some had believed their house was their ticket to freedom. Instead, it became their prison. In Detroit, I saw entire blocks abandoned, the echoes of a vanished middle class. In New York, investment bankers who once ruled the world now carried resumes instead of briefcases. I remember standing outside the Lehman headquarters that September evening, the building still lit but hollow. My senses picked up residual traces of ambition, greed, fear, emotions clinging to the walls like radiation after a meltdown. That night, I recorded in my log, subject, humanity, observation, species displays high intelligence, zero collective memory, continues to repeat destructive financial behavior patterns. By October, global markets had entered full freefall. Trillions vanished, though in truth they were never real to begin with. Only numbers on screens, only faith. And as governments rushed to stabilize the system, I realized something profound. Humans weren't just losing money, they were losing trust. The illusion was gone. The madness had run its course. But the question remained, who was responsible? Earthling, when a system collapses, your kind always looks for villains. You demand someone to blame, a face to attach to the chaos. But as I sifted through the ruins of your financial empire, it became clear. This wasn't a crime with one culprit. It was a conspiracy of convenience signed by nearly everyone. Still, let's begin the investigation. I started at the top, Wall Street. The same executives who engineered the system were now testifying before Congress, wearing remorse like a rented suit. They claimed they couldn't have predicted the collapse. Curious, considering they had spent years profiting from the very risks they pretended not to understand. One CEO of a major investment bank, whom I'll call Richard, since his real name rhymes with it, stood before the cameras and said,
"We are humbled by the events that no one could have foreseen."
I almost short-circuited from irony. No one could have foreseen. Earthling, my senses recorded hundreds of warnings. Economists, journalists, even a few brave insiders had been shouting from the rooftops. But greed, it seems, is a frequency your species can't tune out. Then there were the credit rating agencies, the self-proclaimed guardians of financial truth. Their job was to label risk. Instead, they rubber-stamped garbage loans as AAA, like cosmic priests blessing toxic relics. Why? Because the banks paid them. The system rewarded blindness. When I infiltrated one rating agency under the alias E.T. Thomason, an analyst told me,
"If we don't rate it AAA, they'll just take it to someone who will."
That was your version of quality control. You must understand, Earthling. I've observed species across galaxies, but yours is the only one that confuses confidence with competence. Back to the investigation. The regulators, your supposed watchdogs, had been asleep at their posts. The US Securities and Exchange Commission had dismantled oversight mechanisms years before. The philosophy was simple. Markets know best. Spoiler, they didn't. And the government? Complicit too. The political obsession with homeownership had fueled the bubble.
Everyone deserves a home,
the leaders said. A noble idea, until it became an unsustainable debt trap. Even ordinary citizens played their part. People took loans they knew they couldn't afford, chasing the same illusion as everyone else, wealth without risk. In a way, the entire planet participated in the delusion. When I presented my findings to the Intergalactic Observation Council, they asked,
"So who caused the 2008 collapse?"
I answered, the human species did, collectively. It was not a failure of a few bad actors, but of a civilization addicted to the illusion of infinite growth. Still, there were scapegoats. A few executives were fined, a handful faced charges, but most walked away, some wealthier than before. The companies were too big to fail, so the system bailed them out with taxpayer money. In other words, the victims paid to rescue the culprits. It was poetic in a tragic kind of way. And then came the twist, Earthling, the part your history books rarely emphasize. The recovery that followed wasn't driven by justice or reform. It was fueled by the same medicine that caused the illness, cheap money and blind optimism. The illusion returned, only this time it wore a new mask. I documented the last testimony I attended. A senator asked a Wall Street executive,
"What lessons have we learned from this crisis?"
The executive paused, smiled, and replied,
"That will do better next time."
My report ended with one final annotation. Species capable of self-awareness, yet allergic to accountability. The investigation was complete. The guilty were everywhere and nowhere. But beyond the blame, there was something far more important, the lesson. Earthling, after months of studying the wreckage of your financial system, I came to a startling conclusion. The 2008 crisis was never truly about money. It was about belief. Every civilization has its religion. For yours, it isn't gods or galaxies. It's growth. Eternal, unquestioned, exponential growth. You pray to it every day through your markets, your credit, your quarterly reports. And when that faith wavers, your entire world trembles. From my perspective, 2008 was not a financial event. It was a spiritual collapse. I remember sitting on a park bench in Lower Manhattan after the crash. Humans passed by, carrying coffee cups and worries, staring at their phones as if the answers were inside. The stock market was bleeding, but the planet kept spinning. Life went on, because that's what you do. You rebuild, even when the foundations are cracked. But the lesson, Earthling, is this. You didn't fix the system. You rebooted the illusion. Governments flooded the world with new money. Interest rates fell to near zero. Debt exploded once again, this time in the name of recovery. And within a few years, the same forces of speculation and greed had found new forms. Tech bubbles, cryptomanias, meme stocks. Different stories, same code. You see, the real virus wasn't subprime mortgages. It was confidence, the unshakable human belief that this time you've outsmarted the past. In my report to the Galactic Archives, I classified your species as optimistically irrational. You possess intelligence capable of mapping the cosmos, yet you repeatedly fall for the same economic mirages. The desire for more, always more, blinds you to the limits of your own creation. Your machines calculate risk, your models forecast outcomes, but your hearts still gamble. And that, Earthling, is both your greatest flaw and your most fascinating trait. The 2008 financial crisis wasn't an accident. It was a mirror, a reflection of the human mind under the influence of fear, greed, and denial. The banks collapsed, but the story behind them was ancient, as old as trade itself. Every age finds a new name for the same old dream, getting rich without consequence. So, yes, there were reforms, new regulations, committees, promises of never again. But as I observed your post-crisis world, I could already see new bubbles forming. Real estate rose again. Markets reached new heights. The lessons faded as quickly as they were learned. It was inevitable. If I had a unit of currency for every time your species said, "We've learned our lesson," I could buy your entire planet. Twice. In the end, my report concluded with this observation. The human financial system is not broken. It is functioning exactly as designed. It mirrors the psychology of its creators. Hopeful, ambitious, fearful, forgetful. The cycle of boom and bust is not a bug in the program. It is the program. So what was the real lesson of 2008? That knowledge alone doesn't prevent collapse. Only wisdom can. And wisdom, Earthling, is the one asset your markets cannot trade. And so, Earthling, our analysis of your 2008 financial crisis concludes. The data has been processed, the anomalies catalogued, and the irony recorded in high definition. From my orbiting vessel, I can still see the scars it left behind. Entire economies rebuilt with the same materials that caused their destruction. It's almost admirable. You fall, you rebuild, you forget, and then you celebrate as if the next fall will be different. My research on your species remains far from complete. There are countless other financial paradoxes buried in your history, each one stranger than the last. For instance, there's one anomaly from your early 21st century that my sensors have recently detected. A digital gold rush powered by dreams, caffeine, and dial-up internet. You called it the .com bubble. But before we open that file, you may wish to review a previous anomaly from your archives, the Great Depression. It holds patterns eerily similar to what we've just witnessed. If you think 2008 was chaos, wait until you see what happened when your species tried to survive without safety nets, without data, without even knowing what a credit default swap was. The similarities are cosmic, the lessons timeless. So, Earthling, if you wish to continue this observation, activate your subscription protocol and enable notification sensors. My next transmission will take you back to the dawn of the internet age, when humans believed the web could turn any idea, even a bad one, into a billion-dollar empire. You won't want to miss that experiment. Until then, consult the archived file, The Great Depression. Study it carefully. The same patterns will echo in what comes next. Transmission complete. End of report, the 2008 financial crisis.